For more than a decade, Bitcoin was dismissed by policymakers as a speculative asset, a tool for criminals, or an unregulated bubble destined to burst. Yet, behind the noise of political debates and financial media skepticism, a quiet but undeniable shift is taking place. Governments are buying Bitcoin. Blockchain trackers have uncovered wallets linked to state-controlled entities accumulating BTC at a surprising pace. This raises profound questions. Why would governments, traditionally defenders of fiat currencies, show interest in a decentralized digital rival? What do they know that the general public does not? The answer lies this video. The video is going to be interesting, so make sure to subscribe to the channel and hit the bell icon for more future updates. Let's get into the video. Bitcoin as a strategic reserve asset. For decades, gold has been the backbone of national reserves, offering governments a hedge against currency devaluation, debt crises, and geopolitical turmoil. However, as central banks print record amounts of money to prop up fragile economies, gold alone seems insufficient. Bitcoin, with its hard-capped supply of 21 million coins, is emerging as a digital alternative that offers qualities fiat and even gold cannot fully replicate. Unlike gold, Bitcoin is infinitely divisible, highly portable, and resistant to confiscation. It can be transferred across borders in minutes, bypassing traditional banking systems that are often weaponized in times of conflict. Governments now view Bitcoin not just as an investment, but as a hedge against the vulnerabilities of the global financial system. The fear of dollar dominance and sanction risks. The US dollar has long reigned as the world's reserve currency, giving Washington unmatched leverage over the global financial system. Nations that fall out of favor with US foreign policy often find themselves cut off from the global banking infrastructure through sanctions. Recent examples, from Russia's exclusion from SWIFT to Iran's struggles with dollar-based trade, have shown governments how vulnerable they are to American financial power. Bitcoin provides an alternative. It operates outside the control of any single nation, offering sanctioned or dollar-weary states a way to conduct transactions without fear of seizure or exclusion. Even allies of the US are beginning to recognize the need for diversification. Hedge against inflation and debt crises. Around the world, governments are drowning in record levels of debt. Central banks have responded to crises with aggressive monetary expansion, leading to inflationary pressures that erode the real value of fiat reserves. While traditional safe haven assets like government bonds once offered stability, they now carry their own risks in an environment of rising interest rates and volatile markets. Bitcoin offers an alternative store of value that is immune to inflationary dilution. Its supply is fixed, predictable, and transparent, qualities unmatched by any fiat currency. Governments that begin accumulating Bitcoin are not only diversifying their reserves, but also sending a signal to global markets. They are hedging against the possibility of their own fiat weakness. The rise of the digital economy and technological competition. The 21st century is defined by digital transformation. From artificial intelligence to blockchain, technological competition is no longer confined to military or industrial power. It is increasingly financial and digital. Governments recognize that digital assets are at the heart of this transformation. Countries like China have already launched central bank digital currencies, CBDCs, while others are experimenting with blockchain-based payment systems. In this environment, Bitcoin represents not just a financial hedge, but also a strategic technological asset. Owning Bitcoin means participating directly in the infrastructure of the digital economy. Nations that dismiss it risk being left behind, while those that accumulate it position themselves at the forefront of a paradigm shift. The accumulation race has already begun. Evidence suggests the accumulation phase is no longer theoretical. It is already happening. Blockchain analytics firms have tracked wallets linked to sovereign entities, sovereign wealth funds, and state-controlled institutions quietly buying and holding BTC. Public announcements are rare, partly because no government wants to trigger a frenzy that drives prices higher before their own positions are secured. Yet, the pattern is becoming unmistakable. Governments are entering stealth accumulation mode. History has shown that when powerful entities compete for scarce resources, the early movers reap disproportionate benefits. Just as nations once raced to acquire gold, oil, or rare earth minerals, the same logic now applies to Bitcoin. The difference this time is scarcity is mathematically absolute. Only 21 million will ever exist. The quiet but deliberate accumulation of Bitcoin by governments marks one of the most important financial shifts of our time. Once ridiculed as irrelevant or dangerous, Bitcoin is now being embraced as a tool of strategic importance, a hedge against inflation, a safeguard from dollar dominance, a ticket to digital leadership, and a scarce asset in the coming accumulation race. What governments know, and the public is only beginning to realize, is that Bitcoin is no longer just an experiment in decentralized finance. It is becoming a foundation for the next era of global reserves and geopolitical power. And here we have it. If you enjoyed this video, don't forget to like, share, and subscribe for more content like this. Thank you for watching. Have a wonderful day.